Well, hello traders and investors. I'm LA Little and this is your daily NeoTA wrap where we take a look at these markets and we're doing it from a neoclassical perspective. That means we're looking at supply and demand on the charts. We're using a qualified trend. We're using volume, price, and time to know which direction to be pointing and to be able to time our entries in and out. And that's what trading is all about. And even if you're investing, you do that same thing just on a broader scale, right? A lot less in and outs, if you will. I do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel LA Little. If you want to subscribe, just reach up in the right-hand corner. Anytime I push public content, you'll get a notification. As far as what happened today, a little bump up in gold and silver, oil. The dollar was kind of flat today, didn't do much. On the indexes, you had the NDX itself up 0.5%. It was leading. Russell just slightly behind. They hit new highs and closed, I believe, at new highs. We'll see the charts here in a second. Elsewhere, around the world, pretty much an up day as well. So if we go to the charts and start here with the S&P 500, what you're going to see is that we had that push towards the top. Remember, we got a volume bar here. This was the top of that volume bar. If you go measure it and look at the price of it, the top there is 2268.05. Where did we close it? 2268.88. So we slightly over it. Question is can you hold it? Now, if you're going to break out and make another run, you're going to want to get over this bar here. That's the other bar, right? And it almost got to it today, but not quite. 2273.82 was the high. That number is 2276. That's, in a nutshell, what they're trying to break out above. They're going to do it this week. I doubt it. Maybe we might, but I kind of doubt it. I think probably what you're going to see is this little range hold right up and until next week. And this tight little range that we're in next week is when it's going to break, either to the downside or to the upside, right? Isn't that always the case, right? One way or the other. But we know, independent of whether it breaks to the downside or upside, we know that we got a strong trend. So if you're trying to trade with the trend, there's no sense in trying to counter trend this or trade it short or whatever coming in the new year. If anything, you just want to even out your portfolio a little bit in case you get a pullback. But you want to stay long, folks. I've been telling you that for a long time. That's no different now than it has been. And so that trade is still on the table. These moves to the top side, even if this were the top, it's going to take a while for it to turn. It doesn't turn on a dime. Yeah, you could get a pullback, but you're going to get a bounce after that. And then you can measure it. That's what neoclassical is about, using the market. Let the market tell you what it really wants to do based on volume, time, and on price. If we move over to the other indexes, let's go look at the NASDAQ and at the NDX because those are the ones that got the breakout. That top today on the NASDAQ, now the broad composite, 5489.47. It closes just underneath it, so you didn't quite get the breakout there. I believe on the NDX you actually did get the higher close. Yeah, just barely. So that little top up there, you had 2 or 3 bars, 49.60. This other one was 49.63. Tonight you close at 49.65. So you got your breakout on the top side. Of course, there's absolutely no volume up here. It's rarefied air at the end of the year. Russell pushes up, doesn't quite get there, so nothing really to speak of there. Now, when I say it was big cap technology, it was really in the centered in the chip stocks. Nice big spike up again on the chip stocks on the semiconductor index. And if you remember, it's probably 2 weeks ago, maybe a little bit longer, that I talked about a particular stock in this group that I thought was something that you should be buying on a retrace. And that stock was NVIDIA. So if you pull up that chart, take a look at it, look at this takeoff. And when I was talking about it, the stock was back down here doing these tests. And that was when I was telling you that don't be fearful. You should be trying to buy this, right? It was giving you a test. Let's break it down neoclassically. This is an anchor bar in the neoclassical term. And when you get an anchor bar like that, right, any test back into it's going to give you information, and more than likely a bar that big with a big gap, big wide price spread bar with high volume, right? That's the best anchor you can get. Any anchor like that, when you come back in to test it, you're going to see volume shrink more than likely, which is exactly what happened. It's going to probably hold that. Now it's got to consolidate, right? Because it just made a huge move. You went from 68 to 88. That's a huge move. Consolidate and then do what? You take off again. And that's exactly what this thing has done. Folks, that's classic stuff, neoclassically. I mean, that's just the way it works. And I mean, gave you great entries, and I even talked about it as it was doing these tests, that this is something you probably want to look at. You could either trade the stocks, on a broader, less risky, if you will, less reward but less risk, or you could go into a particular stock that's really strong and it's had a hell of a run already and continues to make a run. Look at this position. This is since it's about a year, a little over a year. You've gone from 21 to 111 now. Where's it going to stop? You don't know. You get on these horses and you just ride them. You're not going to have a full position all the way up, but you keep trading and building that position when you get chances like this, and that's what this stock gave you. As far as the general markets, not much is happening, right? We're coming into the end of the year. You got no volume. The whole question right now is, what are you going to do at the beginning of next year? And as I said on the opening piece, you want to be long. The question is how long do you want to be? Now, you can roll the dice and be 100% and be in, individual stocks. I mean, that's about as risky as you can get. Or you can be, 40%, you can be 60%, 80%. It depends on what you're trying to do and how much conviction you have to stay with something if you get that pullback. Remember, the last 2 years, you've got pullbacks at the very beginning of the year. I am sure they're going to expect the same thing, and I'm sure there's going to be a little pressure right at the beginning of the year to try to take it down. Now, will they? I kind of have this sneaky feeling they're going to fail, and you're going to actually get a continuation of that run to the top side. And the reason I say that is that those MTTFs on these indexes is not that stretched. If I bring the MTTF up, you're at 56.5, right? This will be stretched 2, 3, maybe even 4 weeks farther out, right? About 2 weeks really, you can get it up to about 3 weeks pretty easy. If that's the case, this thing could break out, climb farther, and then drop, right? You're going to get a pullback at some point. You always do. Like I was talking about last week, what you're always trying to do when you get these kinds of runs is you're trying to figure out where's that next, loop going to be. Is it here or is it going to be higher? And it just very well may be higher. If I had to roll the dice, I would be guessing that you're going to get the run up at the first of the year. People are going to panic. When they panic, they're going to jump in and buy even at higher and higher prices, and then you're going to get your retrace, right? And so the ideal is to be long, take some off up there towards the top when you get your first sign, and then be ready to buy that retrace. And why are you going to buy that retrace? Because neoclassically, you're being told that you should, right? Look at this push up. Look at your bars. You get any kind of retrace back into this 22.10 area, that's a definite buy, most likely, folks. And you want to be ready to buy that if, in fact, that's what happens. And it may be such that we set up a different area. For example, let's say we get up to 23.20 or something. The next buy is probably going to be right back on the top of that big anchor bar there. Right, that's probably going to be, it's this bar here. That's probably going to be, if you get that high, the retrace back into there is probably going to be the buy, and it's going to set up another ABCD structure, right, to take you even higher. So let's see how it plays out. But in preparation, be long, folks. Don't be short this market. If it does end up retracing right off the bat, don't be so long that you can't buy more. And that's why I say it's a question about how do you want to position that portfolio, just how long you want to be. And as I'm saying, I think sneakily, my feeling is that they're going to jam it higher. People are going to be forced in, and then you'll get your retrace after that. That's it for tonight. We'll take up another subject or two in the coming days. It's just going to be a slow week, so there's not much more to say about the market, but we can always pick out some positions. Have yourself a great one, and I'll see you next time.